Hi everyone, this is Jeannie. Welcome to my channel. I'm going to try to do an insurance video on your health insurance policy, and this is just an example policy. I'll get right to it. The first thing you have on your policy is a premium. Your premium is what you pay every single month. So, and I'm just making up this policy as we go. It's not a real policy. I'm going to say we have a $500 per month policy. Now I know you can get policies for $80 a month and up. It just depends on what you want on your policy. An insurance policy is like a cafeteria. You go into a cafeteria to buy different kinds of foods. You can pick and choose. So according to your budget, you get what you can eat or what you like at the cafeteria. Well, the same with the insurance policy. You can pick and choose coinsurances, deductibles, and out-of-pocket to fit your budget. The more out-of-pocket you have, the lower your premium. On this particular policy, I chose $6,000, a deductible of $500, and we're going to say a 20% coinsurance. And I'll go over each one of these with you. So anyhow, the premium is what you pay every month. You never get it back. That's what you pay for your agreement, your policy. So even though you've paid this $500, that doesn't mean it's going towards your health care. It's just buying your policy. It's what you're buying. Your policy has a coinsurance on it. Some are 100% coinsurance, which means there's no coinsurance at all. A coinsurance is like a partnership, like a co-partner, you know, or a co-MC. You pay 20% of your policy. Your insurance is going to cover 80% of the cost, not counting the deductible. You pay the deductible. Sometimes it's 25%. So you pay 25%, insurance will pay 75%. You pay 50%, they will pay 50% of the contracted rate. So that's your coinsurance. And insurance is difficult because you have to split your mind up into like 5 different sections to figure it out, but have them all come together like a, you know, like a glove. And that's the difficulty in it. These are all separate little entities in your policy, but they all have to come together in a perfect little circle. And that's what I did at my job. So on this policy, there's a deductible of $500. This you only pay once a year. If you end up in the hospital and you came to my desk and I saw that you hadn't met your deductible, the hospital would collect it. If you went to your doctor's office and had an outpatient procedure at the hospital, the doctor would see this first, and if the hospital didn't get it first, the doctor will ask you for this deductible. You only pay it once for the whole year. When that's done and you have to come for a second outpatient procedure during the year, and you're still have remaining portions on your out-of-pocket maximum, you would only pay the coinsurance. So first you pay your deductible, then you pay your coinsurance up to your maximum of $6,000 on this pretend policy. So anyways, I didn't mean to jump ahead, but my point was you only pay your deductible one time, and you need to keep track in notes of if you've paid it or not. Starting in January to December, I always told my patients, keep track of what you've spent. So this deductible is absorbed by this out-of-pocket maximum. So if you paid the $500, now your out-of-pocket maximum instead of $6,000 is $5,500. And you keep track of what's remaining on your out-of-pocket maximum. That's your little weapon of defense. That's why you have an out-of-pocket maximum, to keep you from paying exorbitant amounts of money to your health care for that 1 year. Some policies are $250 for the year for the out-of-pocket. That's what mine was last year for my husband and myself, and he had his heart thing done, and we didn't have to pay that much, so we had a good policy. This year we don't. So, anyhow, back on track here. Sometimes on a policy you have a copay. Copay is a small amount that you pay to any specialist, like your PCP, and not an anesthesiologist, your internist, cardiologist, dermatologist, whatever specialist you have to be referred to. You only pay them your copay. That's all, and then insurance will pay the rest. Okay, let's talk about the coinsurance, okay? So, if you have to stay in the hospital a couple of days, boom, your entire $6,000 is gone because it's expensive to stay in the hospital. The hospital would probably collect the whole thing if you haven't used, if you haven't paid your deductible. Okay, if you had an outpatient procedure done in the hospital and went home the same day, you're going to get a bill from your doctor, you're going to get a bill from the anesthesiologist, you're going to get a bill from the hospital. If you have to be in a rehab facility in the hospital or outside of the hospital, you would get a bill from them too. And they're going to charge you their rates, whatever it is. But you have to remember not to pay any of these people more than your out-of-pocket maximum, the $6,000 for the year. Okay? So, where does the coinsurance come into play? When do you start having to pay your 80% or your 20%? You start paying that after you pay the deductible. So you have your bill. This is how you figure it out. You have your bill, you pay your deductible, insurance is going to pay 80%, you pay 20%, up to the maximum of $6,000. Okay? Your copay doesn't get absorbed by the out-of-pocket maximum. You're going to have to pay the copay no matter what. You could go to 2,500 doctors during the year, and it doesn't matter what your out-of-pocket maximum is. That's not, you don't keep track of that. So this is just separate. That's just a little bonus that you have to pay. Thanks to the insurance companies. So anyhow, I hope this helped you. If you have any questions, leave them below. Lots of times I'll sit with patients and they'll have a million questions, and I can answer them a lot better that way. Sometimes I go on too quickly, or I'll forget to say something important. So just let me know. Let me know if this helped you. Just leave a comment below. Okay, hope it helped you. Thanks everyone. Bye-bye.